All right, guys. Good morning. Hope you guys are well. Today we have a big day today. So not really any big economic reports, but what we do have this morning is Tesla earnings today. We've had a bunch of big earnings already come out already. So we did have a bunch of stuff already dropped this morning, early. So let's put some stuff up here. Here's Tesla. We had Boeing drop as well. Boeing down. They missed EPS and revenue for Boeing. We had Coca-Cola release also. But yeah, we don't really have any economic reports, but we do have Tesla earnings this afternoon that we're going to stream live like we always do. So be ready. Understand before we get started. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. So understand all these rules. I do trade off stream. You're not going to see all my trades, all that good stuff. And yeah, that's a pretty good spot right here, I guess. Dixie scam continues to rise. I mean, again, man, I talk about this a lot, right? Well, one of the things like we see pretty regularly is like, we see people sensationalize the dollar index. The dollar index pushed up a lot, and people said, oh, it's the end of the world. Inflation is making the Dixie pump up. It's the end of the world. Like, the Dixie, honestly, has been flat since 2023. You know what I mean? Like, if we put up the Dixie here, like, here's Boeing on the bottom chart. If we put up the Dixie, the dollar index, yeah, we put up this, right? Like, let's look at the actual chart here. If we put up this chart right here, and we put up a daily chart, and we zoom out, like, dude, this thing's been flat since 2023. Like, look at it. Here's 2023 right here. Hey, look, let me draw it. Here's 2023 right here. We've literally done this since 2023. So like anytime the Dixie goes up, people say it's the end of the world. When the Dixie falls, people say it's the end of the world. They say, oh, the dollar's crashing, guys. It's the end of the world, right? Usually they're just really susceptible to like election year bias, where it's like an election year. There's a lot of marketing and stuff saying it's the end of the world, guys. Cough, cough, elect our guy. Cough, cough, cough. And I think you got to be resilient to that type of stuff because it's really easy to fall for it. It is what it is, but I think that happens a lot, and so yeah. I mean, y'all, there's a very famous quote in trading and markets and finance, and it says, when in doubt, zoom out, right? Like, the dollar index is sideways. Like, look at this. It really is sideways. Like, look at it. Is it not? Y'all are acting like, y'all are acting like it's flying up, breaking lifetime highs. It's sideways. It's neutral. It's gone. It's done this in 2 years. Yeah, 100%. As long as the world's still going around, somebody's going to say it's the end of the world, right? That's how it's always been. Universally, everybody thinks the markets, or not everybody, universally, somebody thinks the market's always going to crash, even in the biggest bull markets in history. It is what it is. It's okay. Who? Ed? What? Yeah, Coca-Cola. Coca-Cola. I mean, Coca-Cola fell, but it bounced right back. Coca-Cola earnings. We also had, Coca-Cola earnings ended up posting 77-cent EPS, so a slight beat in EPS margins. Revenue of 11.9. Yeah, I mean, it was, they're comparable. EPS plus 5 to 6%. See suggested organic revenue growth of 10%. So yeah, I mean, Coca-Cola's out, but it's not like they had some crazy good beat, you know. I mean, I've watched the Dixie for years. I mean, look, I know the Dixie is sensationalized, and I know it's an election year, and so people are really susceptible to that bias. You know, so like an example of what I'm saying here, and what I'm asking you guys is to try to be like objective about it all, right? And maybe I'm wrong. I could certainly be wrong. But during election years, they try to make you think it's the end of the freaking world, right? Like, it's the end of the world. Oh, cough, cough, elect our guy, you know? And so, like, during election years, a lot of people are susceptible to that type of marketing, for lack of a better word for it. And with that, they end up thinking it's the end of the world. And so anything that contributes to showing it's the end of the world, like the Dixie going down, right? Like, they support. You know, and so if the dollar index goes up, meanwhile, on the other end, they're hearing it's the end of the world, it's the end of the world. They might say, hey, this doesn't make sense. Some people are saying it's the end of the world, but meanwhile, the Dixie's moving up. You know, the Dixie's probably moving up. Like, it makes sense. Payroll numbers wildly over expected last time payroll numbers came out. You know, so like the payroll numbers showed up like 80 or 90% higher than expected. That can contribute to a higher dollar index going up, right? There's a lot of reasons the Dixie could be going up. You know, like, I get it. A lot of people want to kind of confirm what they're hearing, which is it's the end of the world. And so if the dollar index is doing like a different thing, they might be confused or not understand it or whatever it is. But yeah. Yeah, I mean, the dollar index, again, guys, like, it's in a range. If I put up a weekly chart, it'll be even more in a range here. Dixie's probably just bouncing. It's at the bottom of the range here. Like, look, it's literally bouncing at historical support, and it's been sideways for years. So, I mean, is it really a shock that it bounced right here, where it had support here, 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 here? You know, is that really a shocking thing? I don't know. So if it goes up or down, right, one. If it goes up, it's the end of the world. If it goes up too much, you hear stuff like it's inflation. And usually, like, the Dixie going up means inflation problems is what it really means, right? So if the Dixie goes up too much, inflation is the end of the world. If the Dixie goes down, right? Oh, the Dixie's crashing, guys, it's the end of the world. No matter what, people are going to say it's the end of the world. It's confirmation bias. You know, some of them just missed out on investing and stuff. Like, it's all good. Coca-Cola be fine long term. I think, yeah. I think they were mostly flat. I think Coca-Cola's up a lot this year. Coca-Cola opened up the year at 58. It's now at 70 something. Almost 70. Actually, not quite over 70. So it's had a really strong percentage move on the year. It's not up as much as some other stuff in markets, but it's still up a significant amount. Yeah, I mean, your bias is coming out. So the U.S. economy, payroll numbers were 80 or 90% higher than expected. And so saying the economy is screwed, I mean, and what metric are you looking at to justify that sentiment? Genuine question. It's all good. Like I said, I could be wrong. And if I am, show me. You know, and if I am, I'll admit it. I have no problem admitting I'm wrong. I'm definitely one of the top 3 most wrong finance people in the world right now. You know, so if I'm wrong, let me know. But in what ways is the economy weak? GDP still at 3%. Payroll numbers are at like last time they were at like 254,000 non-farm payrolls. Yeah, I mean, unemployment's still under 4.5%. Like where's the economy weak? Where's the weakness in the economy that you see? You know, because if not, if there's no explanation of it, I genuinely just think it's political bias causing you to act like that. You know what I mean? And if that's the case, it's all good. I'm not against you. I'm just saying, if the economy's weak, show me where. You know, and again, we did have the revision in unemployment, but even with that revision, we're still under 4.5%. Our analyst targets for end of year or next earnings. What? I'm not sure what you mean there. Great. Debbie Downer. I'm used to it. I'm always this is what I see a lot. And if you're I have a bias certainly here. And I'm not really political as a person, but what I see a lot is universally throughout the year, somebody's coming in here saying it's the end of the world, right? And then when I'm like, hey, how is it the end of the world outside of like what your political news is telling you? Then it's just kind of crickets, you know? There's never any explanation for it, which makes me think they're just kind of like mirroring what they see on the news, and the news is trying to get them to elect whomever, and so they're like, oh, it's the end of the world. And so I don't really hear any explanation for it. I watch the economy very closely, and right now the Fed is actually turning a little bit more hawkish, meaning restrictive, and they need to be restrictive because of inflation worries and the economic strength, right? Like payroll numbers are really high, and so they were going to cut rates most likely 50 basis points this last cycle. And instead, now they're looking much more like they're going to do a 25 basis points instead, like a less significant rate cut, which means that like if the economy was in a really, really weak place, they would be cutting rates much more aggressively than they are, or than they're planning to. And a lot of it's going to be relative to next week. Next week we have GDP data coming out. We have non-farm payrolls. We have unemployment report. We have PCE data. We have prelim payroll data. We've got huge earnings reports for all the major companies except for a couple. And next week's massive, so it'll give us a little glimpse into the economy. But again, if the economy is in some super detrimental state, explain it. Where do you see that? Well, national debt's always been there. It's been like that for 20, 30 years. Yeah, I mean, it actually is sustainable. It's not growing, it's not, Ken, right? But one thing that's going to help the debt over time is inflation, right? So the stronger the economy is, the more inflation that happens. As more inflation happens, it's going to slowly trickle. It's going to slowly chip away at that debt through inflation. An easier way to put it is like this, okay? So say you have, right, like say you've got, we're just going to make it really simple, and say you've got $100 in debt, right? But inflation grows at 3% a year. We'll call it 3%, right? Over long term, it's going to chip away at the significance of that debt. So like an example, and this is probably why they're a little bit more okay with getting this much debt in the first place, is because inflation will chip away at it. Now they do have to slow down the spending for sure, but like an example of this is like 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in 20 years, it's going to take away about half of that significance of debt. If we had $100 debt, now you can look at a much bigger picture with the actual numbers for this, but the point is inflation is actually going to help that over time. I'm not saying it's good, but it's kind of business as usual, really. Like we're talking about the economy, and I think if people are claiming economic weakness, we have to see we have to see that, we have to see that in payrolls and unemployment and inflation data. We have to see it in the JOLTS report. Will be next week as well, right? We got to see it in something, because lately the signs have actually pivoted towards a stronger economy than expected, which is making the Federal Reserve a lot more apprehensive to cut rates aggressively. Instead of cutting rates super aggressively, they're planning on kind of doing the opposite, which is easing into it. If I look at the actual percentages here, again, the likelihood that we're going to cut rates 25 basis points, still pretty high though. A little bit under 90% now. We're currently at 87%, 88% rounded. This is a 25 basis point cut. This is no cut right here. This is a pause. So that is what we got right there. So 87.5%, 25 basis points, 12.5%. Think it could pause. And we'll know a little bit more as we get closer. Real layoffs happening. I see it personally. Well, maybe you do, maybe you don't, right? What I'm saying is, what you see around you isn't a perfect gauge of the economy, because everything is relative to the area you're in. right? Like there's differences depending on the area you're in. Some places that you're going to be in are going to be doing a lot of layoffs. Other places are going to be hiring a lot of people. It just depends on where you are. And again, I'm not saying we're in some perfect economic state. We're certainly not. I think the real risk over time is inflation. And I think the real reason people are unhappy is inflation. I think prices have gone up dramatically. I don't want them to go up more. I think it's a bad move if they go up more. I think it's not the right thing. Well, a lot of it is short-term work as well, right? But all of those things contribute to inflation. High inflation, low rates is how they manage. Right, 100%. I mean, it makes sense. You know, it's kind of the same reason. Like the easiest way you could put it is like, if you get a mortgage, right? And this is another way to hedge against inflation over time. Say you get a mortgage, right? And your mortgage is $1,500 a month. You know, over time, let's just call it a 3% inflation rate. We could call it 2.5% just to make it easier, make it a little bit more conservative of an estimate, right? So, you know, 3.5%. So you're paying $1,500 a month in mortgage payments, right? In 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 5 years, or in 30 years, that mortgage is going to be much less. You know, much less. It's going to be over 50% less influential over your finances, as long as your pay grows, which it should over time. You know, if your pay stays stagnant, you got bigger problems there. But the point is, you know, over time, that mortgage is going to be less significant. Inflation's going to chip away at it. The same reason inflation's going to chip away at the debt that we have as well, right? Like in 30 years, the same reason, like you buy a house 30 years ago, you get a really nice house for like 150K, right? You try to buy a 150K house now, you're going to get a little bitty shack or in a place that's not the greatest. And so, you know, inflation happens. National debt in 1994 was 4.7 trillion. Yeah, but you got to use the same calculation here. So today it's about 36. Right. So here's the easiest way to put it. Like you got to use inflation and compounding. Okay. So what the S&P is 7x'd in that period of time. Yeah, let's take a look. Here's the S&P 500. I'm going to put a monthly chart up if I can, actually, or a weekly chart. Yeah, here's a weekly chart of the S&P 500. So we'll just go back like, what, 94 you said? So in 1994, the S&P 500 was at $433. Right, $433 in 1994. So we're at 433 and we're up to 5,800. We'll call it 5,900. All right, so the percentage increase is about 1,263%. 1,263%. If we do the same thing to your calculation on the national debt, right? You said the national debt 30 years ago in 1994 was 4.7 trillion. If we look at the percentage increase, 4.7 to 36, which is what it's at now. And this is the math you have to use, right? This is the math you have to use. Yeah, so it's at 665%. And so, like, the inflation is just different, right? Inflation, you have to account for inflation. And when you account for inflation, you know, it's not as significant as you think it is in terms of, I'm not saying it's good, but it's not as significant as you think it is. You got to take into account inflation. So the S&P 500 gains, for example, have grown twice as fast as the debt. You know, and so that's the lens you got to look at it under, I think. It's really, again, it's election year. Like, they're trying to scare people. They want their, like, and I get it. I'm very neutral. I don't really care about either side, to be honest. But the only thing I care about is letting people know it's like we're not always in a crash situation. We're not always in a recession situation. It's not always the end of the world. And I think you have to have an objective view of it if you can. It's hard to be perfectly objective, but you got to look at it as sensible as you can. Yeah, but I hope that makes sense, right? So, and this is the truth, right? Like, this is how it goes. very flat markets right now. NASDAQ very choppy, very sideways. I just care about my money. Me too. That's what I care about this as well. Boeing back up here. So Boeing kind of had a big miss, which is what I thought what was going to happen here. All right, chat. Yeah, I just care about my money too. That's what I care about here, you know. And again, guys, if you haven't already, check out TopStep. TopStep funded account program and futures. They give you a demo. They test your skill with the demo. If they pass the test, they fund you between 50K up to 150K with a 90% split. If you fail, you only lose what you pay for it. In this case, the base one is 49 bucks. And so if you want to learn to day trade, and day trading can be a powerful thing. Like, you can make tons of money day trading. It takes a while to learn. And while you're learning, almost all day traders lose, right? Like, this is just the obvious truth. Almost all day traders lose, especially when they're learning. And so whatever you put up in the beginning, you gotta just be ready to lose that. And so if you put up 5K in an account, you're probably gonna lose it. You put up 10K in an account, you're probably gonna lose it. You put 25K in an account, you're probably gonna lose it. If you try to get around the PDT rule and day trade stocks, you need over 25K in a margin account to day trade actively. You're probably gonna lose it. And so instead of risking $5, $10, $15, $30, $40,000, try a funded account program. It tests your skill. If you lose, it's not the end of the world. If you pass it, they fund you between 50K up to 150K. So it's the perfect middle ground of pressure. The base one is 49 bucks. They give you a 50K demo. If you can make 3K without losing 2K and following their rules and conditions, they fund you 50K with a 90% split. And so the split, similar to putting the money up yourself, the risk is noticeably less. And again, they've paid out over $100 million to their trader. They're the most legit one in the world. You can see they funded 67,000 accounts in September. Been around for 12 years. Again, here's the base one is $49 a month. Middle one's $100K. It's $99 a month. And again, the best part is that if you lose, you're out 50 bucks a month. It's not the end of the world. And again, they're an affiliate of mine. I'm biased, of course, but it's really just a great way to learn. And in the futures market, you could day trade the S&P, the NASDAQ, gold, some currencies. Patterns are very, very similar to blue chip stock patterns anyway. And so, like, I don't see a big reason to day trade stocks, especially if you're new. I think it's just going to cause problems. People get all excited about penny stocks and stuff, but penny stocks are super, super difficult. I mean, all day trading's difficult, but penny stocks are much more random, I would argue. But if you want to check it out, there's the link. Definitely top 3. Tesla didn't have earnings. Yes, Frostbite. Tesla drops their earnings this evening. Oh, we also had the NBA mortgage rate come out. So the NBA mortgage rate stayed flat week to week. Yeah, let me do a poll. There's the mortgage rate right here. So again, there's the mortgage rate that just dropped. Again, it came in flat. I'm going to stick myself up there, actually. Yeah, let me do a poll. All right, guys. Good morning. Good morning. All right, let's ask people about the economy. Do you consider the current economy weak or strong? Weak, strong, somewhere in the middle. I don't know. See results. All right, guys, vote on the poll. Let me know how you feel. Money's not the meaning of life. It just makes life easier. You know, like, I wouldn't call it I think money is just a means to an end. Like, money allows you to do things you want to do. And money makes it easier to enjoy life. It really does. You know, yeah, they say more money, more problems, but like, it definitely makes it easier. You know, like I said, I've been broke and I've done well, and like, there's a stress that comes from being broke, and it's not a fun stress. You know, I don't know if any stress is fun, but there's a stress that you get from being broke, and it doesn't feel good. It doesn't feel good. I guess the easiest way is it just feels limited. Like, you feel limited to things. For the exact rules, Dayan, just click the link, go to their site. They'll have a full breakdown of lists and rules. Yeah, I've been trading on like a 50K funded account. We actually ended green yesterday. I forgot to tell you guys. We did end green yesterday somehow. We came around. We took some risk probably, but we actually ended green yesterday. You love to see it. All right, so the ECB members are speaking a little bit. Did we have some, let me see. Do we have some ECB news? I haven't really checked. I don't think we have any economic data coming out today. We got the Bank of Canada interest rate decision. We also have existing home sales. Bowman speaking, Michelle Bowman. We had the mortgage rate come out. Bank of Canada rate decisions at 9:45. We got European consumer confidence data, existing home sales at 10. Not the biggest report, but that's okay. Tomorrow we actually got a whole bunch of stuff. We got building permits, jobless claims data. We got manufacturing services, PMI new home sales. Friday we got like durable good orders in Michigan, consumer sentiment data. I don't know, it depends, Kevin. I'm not sure if a correction's gonna come after it. I really don't know. Not sure there, brother. ECB's Holdman says he sees a soft landing for Europe is guaranteed. Not sure too much has changed in recent data. Some colleagues are likely to push for a big December cut. Current data does not justify 50 basis point cut in December. Yeah, so we got some... Again, Boeing posted some stuff. It's been kind of a quieter earnings season, I think. Coca-Cola, Boeing, both down. Tesla actually fighting back some here. But it's still down on the day. It's down relative to yesterday. Tesla's still down pretty big. Is the music too loud, chat? Doesn't seem like it, but if it is, my apologies. I'll lower it some. You always raise it back up. Do you think there'll be a ceasefire? I don't know, man. That conflict is so nuanced, man. I'm just gonna stay out of that talk. It's just too, you know. Yeah. Yeah, we're very flat right now. We're not really doing much. I think we're in a downward trend. I guess we could try to short this, but I'm trying to trade small. I usually have some okay results after the opening bell, but this is a little unpredictable. Where's gold at this morning? There's the Dixie gold. Gold is still down. We're gonna short this. We'll take 2 contracts. I'm trying to trade larger size. I really need to. So we're trying to trade larger here. We got 3 contracts and micros here. Trying to bet on this downward trend. Is that better? Is the music better now? Yeah, so we are day trading futures. I'll add another piece to this. 4 contracts now. That'll be the max. Again, we did actually end net green yesterday somehow. I don't know how. Look, here's the list of my trades if you guys want to see it. We did end green. So I will take it. Alright, so, well, definitely got unlucky there. We were trying to buy the range. I thought the range looked really nice, but I think it probably went on for too long. And again, we're trying to trade larger, so we're okay. But like, here's the range. And I guess we did start breaking out of it. There's the top of the range. I don't know if did any earnings come out? Something to make the market pump? Nah, we don't really have any data. Yeah, I mean, Ma, you just seem really emotional, man. It's okay. You know, like, obviously we could agree to disagree, but you just kind of keep yelling the same thing, you know? And that's all right. Like, listen, it's okay. You know, if you feel that way, it's all good, brother. It's all good, man. Again, I think you're, like, again, you got to look at a long-term chart of the dollar index. You know, the long-term chart of the dollar index. The dollar index is not really, like, super, super high. You know, like, put it into perspective. At the end of 2022, it was at 114s. Like, we're at 104s. You know, we're not even anywhere close to all-time highs on the Dixie. You know, and so, we're also going to try to get funded in another account. So we're going to try to get funded in another account. I'll probably switch to that now, and we can play around with this morning. We're going to have to switch. All right, so again, bear with me, chat. We are going to try to get funded. We got to try to build up $1,500 in profit. We might have to reset. We're kind of attacking this short-term extension here. Taking our first little swing. There we go. We took a piece off. Took a piece off. Got a nice little cushion here. Took another piece off. What a terrible fill, dude. I guess it's okay. All right, we'll add to this since we are green in it. Alright, so we're up again. We'll take another little piece off here. Nice little cushion. We'll get out there since we're getting closer to the level here. I know it jumped from in 3 weeks. From 99 to 104. Yeah, I mean, I get it. It's up a little bit in the last 3 weeks. It probably has to do with payroll numbers came in super high relative to expectations, right? So non-farm payroll numbers came in 80 or 90% higher than they thought they were going to be. So it's not really like a shocking thing if payroll numbers come in super high and then the dollar index pushes up because of it. So we were actually correct about our initial trade there too. So yeah, it's not really like a shock, I guess is the point. And if you look at this, again, you got to look at the broader range here. You know, like you got to look at the whole range of the Dixie, not just short term. So Tesla today is expecting 58-cent profit per share on $25.5 billion in revenue. Yeah. So thank you. That reminded me to cover. All right, so we got a nice little dip. I'm gonna buy this bounce here. We'll add 2 contracts. I think it's a little risky, but that's all right. We'll still play with it. So we're down a little bit. I could either add to this position or, which I think I'm going to. I'm going to add to this. We broke the trend. We're kind of buying the previous support level. Wish me luck, chat. All right, we're up a little bit. All right, hold on, guys. I'll be right back. All right, guys. Sorry, I'm here. All right, buddy. Love you. Have a good day. Love you. Have a good day. All right, so we're gonna go ahead and take a piece of this off. Take a piece of this off, and we got one contract left. And I don't know how much we're up in this one, but we're up something. Yeah, no, I know. This is here, hold on. Actually, I'm gonna immediately cut this and get out. So we're out. This is our string of trades. I don't know how much I'm up here. We're up $500 roughly on this one. Cool. Let's see if we keep it up. Yeah, this is a combine account though, guys. I traded on my other one. I'm gonna wait and trade on my other one a little bit later. But yeah, this is a combine account. So point is, I'm not taking that much risk. I'm not that crazy, chat. I'm not that crazy here. Why do you hide the balances? Mostly because it's very difficult to trade on stream. Like, my channel is like not claiming to be a guru. I don't sell a course. I don't sell a service. I don't claim to be an expert. I don't even claim to be a good trader. We mostly cover economic reports and like big finance news, like earnings, economic data, CPI, inflation data, FOMC meetings, Powell press conferences, like earnings, stuff like that. So I'm not even claiming to be some super great day trader, and to be blunt, it's very difficult to trade in front of hundreds of people, and having everybody see exactly how much I'm up or down constantly is. I usually tell people if I'm up or down by how much at the end of the day, but yeah, to be honest, it's easier, you know, and that should be understandable. If I was selling a course or telling you guys I was the greatest day trader of all time, definitely top 3, then that would be a different thing. Yeah, it should be understandable. This is the internet, you know, so you're gonna have some people that are just kind of, you know, they're just trying to get upset, but, you know, thus is the nature of the internet. I'm gonna take one contract here. I'm gonna try to make it a longer term contract though. Our risk level is about right here. So we break down under this here at 476, we're gonna get out. Understandable, yeah, for sure. It should be, right? Like, again, if I was out here telling you guys I was the greatest of all time, and I'm here to tell you, like, almost all day traders on the internet are full of crap. None of them are like, look, they're marketers, and I'm a marketer too. I make money doing this for sure. Like, this is what I'm doing this to make money, of course, and that's what we're all here for, and that should be understandable because I'm providing people a service. Right, y'all get economic data quickly. If y'all want to know if something's going on, again, subscribe. The most people that watch my channel watch it because I cover economic reports. Right, like I cover all of them. They know if something big's going on in markets, I'm gonna stream it. Like today we got Tesla earnings this evening. I'm gonna stream all of it. We're gonna stream the earnings release, the earnings call, all of it live. And people know if they want to tune in that we're gonna be here streaming some whatever big is going on in the markets. And so we provide that service, and in turn we definitely earn money. And I wouldn't do this if I didn't make money, of course, which nobody would. I can claim to, you know, I'll create millionaire students. And guys, I do this out of the kindness of my heart because, you know, I just love teaching, guys. But that's not the truth, right? I'm here to make money, of course, like everybody else. And I would rather trust somebody that's honest about it, you know. I'd rather watch somebody that's real about it instead of trying to pretend like they're Mother Teresa over here, you know. Hey, thanks so much. Hey, I appreciate it. Thanks so much. All right, we're down to this trade. Again, our risk level, like I said, is right around where we're at now. So we're very, very close to cutting this. Actually, our risk level is right here at 80. We're up about 500 on this one on the day. Hey, thank you, Marie. Love the economic reports. Love your show. Thanks so much. But what if you're the top 3 biggest trader of all time? I don't know if I'm the biggest. I might be the top 3 best ever in the world for sure. Definitely top 3, but I don't know if I'm the biggest ever, you know. And we're going to go ahead and cut that. All right, so we're down, or we're up on the day, but we're going to cut that because once we break under this support level, like the probability that we're going to fall goes up, I think. Watching Tesla pretty close here. You think gold is exhausted? I'm in college for electrical engineering and I'm out of cash to keep investing. I come here in the morning for the info and the fun convos. Hey, thank you, Amateur. We appreciate it, man. Yeah, I mean, again, you can't please everybody on the internet. And so I know some people are gonna be weird. I know we got a good mix of like supportive people mixed with like some kind of like weirdos who get hyper obsessed with the channel and try to either like throw me off and create usernames, and then they're nice on one username and then they're weird on the other. You know, some of them will say something shocking on one name and then criticize my reaction to it on another name. You know, like people, the internet's freaking weird. But to be blunt, I make enough money to where it's okay. I'll just let it happen. And I'll just rant about it to you guys. This is my therapy here. You know, y'all won't tell anybody, right? Anyways, Tesla pushing up to 217s. Hey, but yeah, I appreciate it. We cover, you know, I try to help people understand like real markets, right? Like what it actually is. There's a lot of misconceptions in finance, and the finance industry is filled with nonsense too. You know, and I guess I get it. Like I've said before, I always played like chess growing up and checkers and strategy games, poker. I love freaking poker. Poker's like my favorite game ever. And I think this is very similar to that in a lot of different ways. I think I would have made money if I would have just held that trade a little bit longer. And man, look at it. I think what's happening is people that got stopped out like I did are now getting squeezed out. And so this is causing this little jump up here. But again, this week's kind of slow, man. You know, the last 2 weeks have been boring. Like this has been probably the most boring 2 weeks that my channel has had in years, in literal years. Why has it been boring? Because for whatever reason, this month, I don't know if it has like anything to do with the election or what, but for whatever reason this month, they organized economic reports very strange to where all of them are showing up next week. Next week, we got the JOLTS report, non-farm payrolls, unemployment, PCE data, GDP data, Apple, Amazon, Microsoft, Snapchat, Meta, all the big earnings reports outside of like Nvidia really are next week. And every major economic report is all next week. So next week's going to be crazy. It's going to be incredibly busy. I'm going to be streaming nonstop with virtually no rest. And because everything's so consolidated to next week, the last 2 weeks have been kind of boring. Generally speaking, they spread it out, right? So generally they spread it out to where, yeah, so here we go. We did get a breakdown here. So I was right. It's just kind of a lot of up and downs. But generally they spread it out to where it's like 1 week we'll get PCE data and GDP. Or no, 1 week we'll get PCE data and, yeah, GDP data and PCE data. Another week we'll get non-farm payrolls, unemployment, you know, prelim payroll data. You know, another week we'll get like the JOLTS report and ISM manufacturing, PMI, and CB consumer confidence. And so they usually do a good job of spreading it out throughout the month. But for whatever reason this month, it's just weird. And everything's going to be next week. Top 3 poker player of all time. Your point regarding inflation and the national debt was enlightening. I never considered that. Yeah, I mean, you got to think about inflation always, chat. Like, even like, okay, everything is a hedge against inflation. Because if you sit on cash, you got a lot of people that are like, yeah, bro, I don't trust the government. I'm just going to sit on my cash. You know, it's like, okay, well, you're going to lose boatloads of money over time, you know. But congratulations. But you're going to lose boatloads of money over time. Why? Because inflation's going to happen. It never goes down. It never literally goes down. It slows down. It's going to happen. And so everything that you see of in finance, literally every freaking thing you can see in finance, one of the purposes of it, at the very least, at least one of the purposes, is to hedge against that inflation. And this can be gold, silver, real estate investment trust, the S&P 500, the NASDAQ, whatever you can think of is a hedge against that inflation. You know, your job is to earn like 5% a year. You earn 5% a year, you're going to keep up with inflation. You're probably going to beat inflation. Right, but you got to earn at least 5% a year, usually, to do it too. So, 3 to 5%, and you can get that in bonds, right? Bonds, again, hedge against inflation. If you don't do that, your money's going to go away. Just like the national debt is less significant. If you don't do it, your money's going. You know. So again, you got $1 million. and let's say inflation's 2.5%. 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 30 years, that $1 million is going to be noticeably less buying power. It's going to be the equivalent of $444,000, $445,000 today. And so if you don't invest it, that money's getting chipped away over time. And that's the opposite of how it should behave with compounding. Like if you look at the other end of that, and this is something I do every day because it's important for people to understand like what this all means. If you do it the other way with compounding, let's say you grow at 10% a year, and you got $1 million, right? If you invest in the S&P as an example, you'll earn about 10% on average every year. Good years will be much more than that. Bad years will obviously be a negative, but in the end, the average is about 10% over time. So you do this over 30 years for $1 million. 1, 2, 3, 4, 5. Oh, wait, I did it. You do $1 million times 1.1. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 30 years, your $1 million will be almost 18 million in 30 years, And so the overarching point here that I try to make every single day, guys, is invest your freaking money. If you don't, you are losing money. Do not sit on lots of cash long term. Not unless you need it, Now, there's ways that you can do this and still be pretty liquid, certified deposits. You can do this and be pretty liquid. You can buy like examples of like ETFs that pay you the same as treasury bills, like T-bill is one, TBIL. The TBIL ETF will pay you like you invested in treasury bonds. Right now it'll pay you what? Right now it'll, yeah, let me see what it pays you. I think it pays you about 5% right now. It looks like it pays about 5%. I think this will pay you like 5.3%. All right, look at the market breakdown too. Let me get AI out. All right, so T-bill, 5 to 5.5% annually. And so if you buy this right now, hold on. Let me clarify just to make sure. So this focus, yeah. So the annualized yield is around 5 to 5.5%. And so if you want a liquid way to make 5%, right? And there's a lot of ways you can do this, like Robinhood's famous for offering whatever. There's a lot of ways. Treasury bills are guaranteed returns. They're basically, when you hear treasury bills, you're loaning the U.S. government money. Like that's what T-bills are. You're loaning the U.S. government money. If you buy this ETF here, though, it's much more liquid, right? So an example, I have 100K. If I buy a 10-year treasury bond, right, and that 10-year treasury bond pays me, I do this math every day, so please excuse me if I'm like a broken record with this. I think it's important for people to understand. Even if y'all graduate and go to like a different channel and like watch a different thing, this should hopefully give you like a base of understanding about a lot of levels of finance so that you can understand it a little bit easier. So we're pulling back to this support level on the NASDAQ here as well. So we'll see if it holds, but this is a big support level historically. You can see we bounced right off of that. I don't know if I want to buy it or not. I think I'm just going to wait. We're already up like 400 here. I think I'm going to wait. But anyways, so say you buy, what's the 10-year treasury bond yield right now? So the 10-year treasury bond yield currently is 4.24%. If I got 100K and I loan the U.S. government $100,000 for 10 years, which is a 10-year treasury bond, every year they're going to pay me the yield, which in this case is 4.24%. So every year they're going to pay me 40, or no, that's wrong. So I did my math wrong. Let me see where I did. $100,000 times 0.0424. I think that's right. Yeah. So every year they're going to pay you 42,000. I should have been able to do this in my head, but every year they're going to pay you about 4,200 bucks. And then at the end of that 10-year period, it's called the maturity date. You're going to get that 100K back, right? So in theory, you're going to make $42,000. So you're going to make like 42.5% on your 100K over a 10-year period. And that's not good. That's bad. That's really bad. You know, I mean, it's not really, really bad. It just doesn't include compounding, right? And compounding is what makes you money over time. But with that said, if you wanted easy 4 or 5%, you can buy this thing here, which is a symbol. It's called T-bill, TBIL. It's an ETF. They will pay you 5% annualized into monthly dividend payments. And the reason I say it's more liquid is because if you buy actual treasury bills, your money's tied up for 10 freaking years, a decade. That's not good. You know, if you desperately need your money, you can't get it. It's stuck, you know. And so one of the ways you can hedge against that lack of liquidity, I mean, you can get it, but it's hard. It's hard to. You could always sell your treasury bonds, but you're going to get a little bit worse slippage, I guess is the better word for it. Anyways, look at the break under this low. So we did just break under these lows. If you buy this on TOS as an example, every month they're going to pay you that dividend annualized. And so if they're paying out 5%, and this is something that I made a bunch of money on in last year too. So I had about 70,000 in this. I recently took it out, but that's a different story. I had about 70K. They paid me 5%. So they paid me about $3,500 a year, but it was monthly dividend payments. So they ended up actually paying me, it must have been a little bit over 70 or a little bit over 5%, because I ended up getting like $306 a month in income every single month. And then if I was ever ready to sell it and just get out of it, I could just sell the positions in T-bills, unload the position, get my money, and do whatever I want with it. It's more liquid, if that makes sense. We just broke under this big support level. Yeah, we're streaming Tesla earnings. I mean, this is definitely not financial advice. This is just teaching people what different things are. I'm certainly not telling anybody to invest in anything. I'm not an investment professional. There's always risks in everything. You could always lose money. Yeah, DC McDonald's is down a little bit. Interesting. It's not financial advice. I can graduate. Yeah. Again, we do have this big breakdown here. The downward trend is certainly there so far this morning. Put a 5-minute chart up. We're still at a pretty big support level. It just depends on if we can retrace and come back up some. We'll see. Yeah, but so T says CONY, 128% yielded monthly dividend. Yeah, I'm sure there's no risk shooting for 128%. Yeah, I don't think it's anywhere close to what you're saying. 128%, unless I'm missing something here. It's a 0 to 3 month treasury bond. Yeah, it's 4.91%. It's actually below the 12-month yield of 5.25%. So, yeah. I'm not sure where you're getting 128% yield. Yeah, I mean, if you look at it, there's a cost to it too. So like if I look at this here, it's going down a lot as well. Unless the data I'm getting is wrong. Yeah, so it's AI apparently says a yield of 128% for the 0 to 3 month treasury bond ETF is highly unlikely and seems to be a misunderstanding. It involves this ETF involves short-term U.S. Treasury securities, which currently yield about 4.91 to 5.25% annually, as confirmed by recent data from BlackRock and ETF database. Yields in the 100+% range are typically associated with very high-risk investments. Here's the listen, guys. Nothing is going to earn you 128% safely a year. Right? If you can make 30%, that's elite. Okay? If you can make 30% regularly, regardless of markets, that's elite. And so all these different places that are telling you you can earn 10% a day or 5% a day and like all that stuff are just telling you what you want to hear. Like, study confirmation bias and the impact on our like human brains. You know, like essentially, if you want to believe something, you'll ignore red flags behind it. And I think it's super prevalent in trading just because so many people want to believe that they can get rich. So we're trying to bounce here. I'm gonna buy this now. I'm not telling you guys what to do. We'll take 2 contracts here. We already got a pretty big cushion on this account for the day. Yeah, I see it says yield max. Yeah, I see it, yield max coin. Option ink strategy. Yeah, they might have changed it. I might be looking at an old definition. You might be right. We're up a little bit. Yeah, I'm doing more research into it. Again, if it gives you 128%, something's wrong with it. Okay, so yeah, I'm reading this. It says the yield max Coinbase call options ETF seeks to generate income by selling covered call options in Coinbase. Recent data shows yields approaching 75% annually. But this is what you got to understand, though. Okay, so like, yeah, it might be that. You got to look at where it started the year, though. So like, while it might generate yields in that regard, like, look, CONY. Look at how much it's down just in 2024. Is at $30. So this thing is down over 50% per share in 2024. Right? It's down 50%. Or more in 2024. At January 1st, it was at $30 plus. It is now at, I'm gonna go ahead and sell half of this. It's now at, oh, what a bad fill I just got. It's okay. So it's already down 50% of the year. So it's kind of playing with fire. Like, you might be able to get big returns, but the risk you're taking here is super, super high. And I guess AI got the first type wrong. I'm not sure what it gave me in the beginning. But like, yeah, again, like, you're holding something that's down over 50% on the year when sometimes yields can spike as high as 75%. So there is a 25% discrepancy there. But the risk is super high, you know, is the point. And again, I just don't know enough about this to really say good, bad, yes, no. I don't know anything about it. Yeah, crypto's interesting. Yeah, if you can make 2% daily and compound your sizing with all profits, you'll be the richest person in the world within 3 years. Which is kind of like, again, it comes from a lack of understanding about markets. Like, the people preaching this just don't understand markets. A lot of them just see it as like a scheme, right? So they come in finance, they promise the world, they find a bunch of people who know even less about finance than they do, promise them the world, and then kind of rip them off and ride off into the sunset wealthier. You know, that's kind of how it goes. All right, chat. Hey, what's up, Sean? So we're down. I don't know if I want to add to this or not. I'm trying to be patient. We've got a double bottom at a support level that's pretty big. And so that's what I'm trying to play here. We did take some profit, but we were wrong. What's up, Zach? Yeah, there's a very famous saying, or there's this favorite, like this, there's this TikToker who, like, you know, she was kind of like a lady TikToker who, like, kind of took advantage. Like, I'm trying to think of the best way to say this. Like, she was pretty, and so I think she got a bunch of people watching her because she was pretty, but you could tell she just didn't understand finance, right? And she started telling people that, like, hey guys, if you just make 5% a day, at the end of the year, you could earn millions. And it's like, well, yeah, You know, if I go out and win the Powerball 6 times in 2 months, you know, I could be rich, guys. You know, that's essentially what she's saying. It's like, congrats, that's amazing, but it's not feasible. It's never gonna freaking happen. That's like me saying, hey, if I go out there and I win 100% of my hands in poker for the next 3 years, I can make millions. It's like, well, duh. You know, is it gonna happen? No, it's not gonna happen. All right, so we're kind of flat on this position here. I don't hate it though, but you know, we're gonna sit in it. Yeah, I mean, 5% a day with compounding is probably what she was using. I'm not sure how. If you got a $5,000 account, you earn 5% a day. No, don't do it. Don't do it. Don't fall here. We'll probably have to cut this pretty soon. If you got a $5,000 account and you earn 5% a day with compounding, how many trading days in a year? $252 trading days. All right, let's do it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. All right, so after 100 days, 100 trading days, you make 5% a day in a $5,000 account after just 100 trading days. I'm not going to go throughout the full year. You would earn $1,071,008.46. Just a little 5%, guys, in your $5,000 account, you know. But yeah, that's why it's ridiculous. It's because it's never going to freaking happen. Yeah, I'm not sure if this calculator could do it. All right, we're probably going to cut it. We're still green in this account, but I don't want to test lows here and get stuck in a deep low test. I want to see if it bounces at this big old support level that we have. All right, I'm gonna get out. I'm kind of bummed about it. We're still green on the day. We got a cushion. Yeah, I could have switched calculators. You can't do it times 100 though. It's not the correct result. You have to either manually do it, or I don't know if there's a formula on a basic calculator to get it though. You know, there's no exponent options here on the standard calculator. I'd have to pull up one of the different calculators, and it's probably just faster for me to learn that than. Oh yeah, John's Water stream. All right, so we're at the bottom of this range here. Yeah, and again, I talk about this a lot, right? But this is something that's super, super prevalent in trading. Super, super, super common. Everybody wants to act like they're a guru, genius, prodigy, savant, like, you know, professional day trader. Most of them are not, right? But what happens is, like, traders will take a $30,000 account. Usually it's like a $10,000 account, and they'll take a stupid amount of risk in that $10,000 account. And they'll make $5,000 one day, like risking the entire account. Because in order to make 50%, you're gonna have to risk the whole freaking thing, you know? So they take a 10K account, take massive risks. A lot of them are in options, to be honest, because options are just hella risky. And so they make 50% risking the whole account. And then before you know it, boom, they're a trading guru, right? And I make 5K a day, guys. They're gonna say, oh, I make 5K a day. It's like, do you really make that 5K a day, or did you just take a bunch of stupid risk and make 5K one day, and now you're just kind of extrapolating that over, you know, every day, acting like you're a guru now? It's usually that one. It's usually the latter. It's usually they're just trying to act like gurus, and if they keep taking risks, their whole account's gonna go away, essentially. So it's what it is. That's what we see a lot in trading. Kind of how it goes. Yeah, so we're testing this big support level. Part of me wants to buy it, but I'm also trying to be smart with it too. Please teach us how to make money like you. And what? How to make money where? You want to know how to make money? Find a niche, get in early. That's what it is. That's really it. Like, that's what it is. Find a niche, be passionate about it, get in early. That's it. Do they sell their PDF on YouTube? Yeah, for sure. It's just, again, yeah. And again, I've said this once, I'll say it again. You better believe, right? Like, if somebody's really that good at day trading, you're gonna see broker statements. You're gonna see receipts. You know why you don't see a bunch of receipts? You might see one receipt out of the year. It's the 1 month they're profitable, so they're showing you to it because it's the 1 month they're profitable. But if I'm selling a course, dude, I'm showing all of it, right? Why not? Why wouldn't I? And so. Yeah, Boeing had earnings. They missed EPS, missed revenue. But last time I looked at it, they were kind of flat. Yeah, I mean, they're down a little bit, but they're not down as much as they could be, I think, throughout all this stuff. We're going to pull up the dollar index today. What happened? I just wanted the Dixie. There it is. All right. Yeah, I'm not gonna say some of the penny stock gurus, even if they show you broker statements, are still sketchy. The reason they're sketchy is because they have such big followings that they can, if a stock has a low enough float, you can inflate that float, or you can inflate that stock, right? An example is if I'm targeting a low float stock and I've got thousands and thousands of people watching me, and I announce to everybody that I'm buying that stock, what's gonna happen to it? The stock's gonna go up, you know? Most likely. Why? Because everybody everybody and their grandmother are buying it now because I told them to. And then what happens? The stock goes up. Maybe say I make. Usually they front load into it, so they buy it like well before they make that announcement that they're buying it. And then they claim to be transparent, and then they pump the stock up, and then they sell it, and they make 20K, and then they screenshot the 20K and say, "See, guys, buy my day trading course." You know. When really they're making their money pumping the stocks up. They're not making their money actually, like, you know. So. Well, that's because he had to pay out $3 million or something like that to the Department of Justice or the SEC, right? Again, I'm not really criticizing anybody or targeting anybody here. I'm just saying some of them might be legit. I don't freaking know. But most of them aren't. Yeah, like people make fun of me for having so many disclaimers and telling everybody I'm the top 3 worst trader of all time. But the reason I do it is because of that. Like, I'd rather just be honest with people. I'd rather understate it. I'd rather understate myself and over-deliver than overstate myself and under-deliver, you know? All right, chat. Yeah, the freaking scammers, man. Yeah, I did share the scamming thing here. I don't even have my Discord up today, Pawn. My bad, dude. Part of me wants to buy this. I don't know if I want to. I guess I will. We just got so much support here. So maybe I'll add a little bit more. This is a challenge account, so if we lose, it's okay. Starbucks stock drops after dismissal. Dismal earnings, suspended guidance. Deutsche Bank shares fall on doubling of third quarter loan losses, but profits are up on Deutsche. AT&T posts subscriber beat, but stock falls as company takes a big charge. AT&T's actually up a little bit now. McDonald's stock is down after CDC ties quarter pounder to some stuff. Boeing unveils $6 billion quarterly loss ahead of keynotes by striking machinists. Yeah. So we got Tesla earnings today, chat. It's a massive report. I'm going to add to this here and play with this. It's risky, though. Again, we have our cushion on the day. We'll see if we can play into it. But I am going to cut this quickly if it doesn't work for me. Yeah, so we got Tesla earnings this afternoon, chat. We've got Tesla earnings. What is this? Tesla quarter 3 earnings, right? Oh man, I look the other way, guys. I'm down. I'm probably flat on the day after this. I guess I'll give it a second, but I'm not really happy about this too, of course. So now we're completely flat. I like the retracement, but sometimes these little retracements fail pretty quickly too, though. I guess we'll play with it. Alright, I'm gonna go ahead and take a piece of this off now and just lock it in somehow, some way. So we're up about $100, $130. I'm gonna add to this now that we're green, and we're green enough to where we can quickly exit like that. We just locked in $150 in profit. Didn't really get the best fill on the rest of it though. Alright, so we're down a little bit. I'm going to add some size to this, see if we can fix it. But it's only because we have a big cushion on the day. Wait, yeah. Alright, so now we're green. How did we get a bad fill on that? We were green. I guess we're still up some in this trade, but... I'll let it work a little bit. So we're up a little bit here, chat. So slightly green, now we're slightly red. Try to be patient with these trades. You guys can see Tesla moving up a little bit, AT&T down some. Our range is so small at this point in time. We got 25 minutes until the opening bell. I guess I'm gonna cut that. We ended up getting out slightly green on the trade. I'll take it. Better than a big losing trade, I guess. Yeah, remember today is Tesla earnings, chat. Still at that big support level I've been targeting all morning. And we're green on the day for sure. Pull it back. Now we're under that major support level. Also, we're going to throw it in sub-only mode, so if you haven't already, hit the sub button, hit the notification bell. I appreciate it. There it is. Part of me still kind of wants to buy it. We got 23 minutes left. So the interesting part about Tesla earnings is what if they're gonna update us on the Robotaxi Optimus. Again, I'm a little bit underimpressed with Tesla, specifically because, like, okay, Tesla has their Optimus robots, and their Optimus robots essentially had people voicing over into them. They weren't actually communicating. Like, AI wasn't actually communicating. And I think that's, while it's okay and it's cool and all, I think the problem lies in that if it's not actual AI doing it, then what's the freaking point? You know what I mean? Like, why does it even matter then? If it's not actual AI doing it, who freaking cares? If you got a person like, you know, like the dancing's cool, sure. But again, I guess the point is, like, who freaking cares if the robots are the one communicating back to us, right? SPY has a chance to hit 584s. Yeah, we're doing Tesla earnings. Again, the Tesla earnings stream's right here if you want to see it. Yeah, so here's the Tesla earnings stream if you want to check it out. It was a bit deceptive. I think it was too. Coca-Cola earnings showed up. KO earnings showed up like this. KO posted 77-cent adjusted EPS versus 74. Revenue of 11.9 versus 11.6. Better than expected EPS at revenue. Who else has the same robots? Right, but the robots don't do anything right now. Tesla doesn't even have the robots, is the point. I guess is my point. Like, and again, I like Tesla as a company. I think if they can stay in front of FSD, they're going to be powerful as a company, right? And they already are, obviously. But I guess my point is like, okay, so if the robots are being controlled by remotes, if the robots aren't actually talking to people, then what are you debuting? You know? Like, I could put a loudspeaker in my car and drive around pretending to be a robot car and say, hello guys, I'm a robot car, right? Does it actually make me a robot car? No, it doesn't. So what's the freaking point? like wait until the technology's actually there and then debut that technology. Don't, you know what I mean? And I like Tesla, I really do. And I'm excited to see what they have for their earnings, and I hope they go up long term. I've been a big investor in them. You know, I just think it's a little bit premature to debut the talking robots if the robots aren't freaking talking, you know? And what's the point? I guess the point is, like, okay, NKLA EV company got in big trouble because they pushed their EV down a hill, right? And they acted like said EV was really driving when really they just pushed it down a hill. They got sued for fraud. CEO had to step down, all that different stuff. And so, yeah, you know what I mean? Like, so I guess my big point is like, what's the difference here? And I hope that, like, I like Tesla, and I think they've been unfair to Tesla in a lot of ways too. I just, again, I have a hard time understanding the purpose of that if they're not actually there yet. You know, so if they're not actually there yet, what's the purpose? I guess is the point. Maybe he was talking about the mechanical functionality versus the AI component. Sure, I guess that's true. You know. Yeah, it's just so far away, Danny. I agree. Like, it's way up far down the line. I think it's too premature. I think him saying, hey, guys, like, him saying, hey, we're going to sell these robots for 20 to 30K. Like, I think he should have waited. I think he should have waited. I think he should have waited to do it until the robots were actually functional to where I could actually go up and meet an actual talking robot. That's a different thing, right? And I would have loved to see that. And I think the technology we have is close. But I think that it's still a ways off. And so in that regard, I think one of the things that negatively impacts Tesla stock is that Elon overpromises and underdelivers. I just don't want to see another thing in this instance in which he's promising all these different things that we don't see for half a decade or longer. You know, Cybertruck debuted in 2019. We didn't actually get the Cybertruck until late 2023, almost 2024. And I think that does negatively impact the stock sometimes. And so I just don't want to see that. I hope they, you know. Yeah, but you can change a diaper from 20 kilometers away. I'm not saying I wouldn't trust a robot if I was far, far away. If I was in a galaxy far, far away and I needed to change a diaper, I'm not saying I wouldn't trust a robot to do it for me, but I definitely wouldn't trust a robot to do it for me. You know, would you guys? Y'all taking that risk? I'm not. Which stock of index should we buy for today? Should we go all in or buy in batches? What? Not sure what you mean there. No, for sure. Listen, I grew up on movies like Bicentennial Man with Robin Williams as a robot. I want to see that. I really do. I think that'd be cool. I've always wanted like a robot homie to hang out with me and chill. But I just don't think we should. I think we should wait until we actually have it instead of trying to look so futuristic and tech-based, but over-promising, you know. I still think it's a long, long way out, and there's not really a point in talking about it if we're not there. And again, I like Tesla. Like, if you hear me say this, like, I actually love Tesla as a company. I think Tesla's great. I think they're going to be powerful. I think FSD is going to make them powerful. I think full self-driving is the future of automotive technology, and I think it's something that we're definitely going to have within 20 years. And I think once it starts to happen, everybody's going to want it, and it's going to have a snowball-like effect that's going to grow Tesla, if they can stay on top of it, in a huge way, right? I really do. But as for the robots, I just don't think they're ready. And since I don't think they're ready, I don't think it was time to debut them. But all right, guys. So we are up a little bit today. Let me see exactly how much we're up in this one. We are up $187. So we will see if we can continue to make money here. All right. How soon into the robots themselves make the matrix? I don't know. We'll see. Again, we're trading on Top Step's funded account program today. If you haven't already checked out Top Step, it's the most legit one in the world. They give you a demo. They test your skill with the demo. If you pass the test with the demo, they fund you in a regular account between 50K up to 150K. 90% split. They pay out millions. They paid out over 100 million, fund thousands and thousands. It's just the best middle ground of pressure. Instead of trying to day trade yourself with your own money, funding your own account, almost all day traders lose. Don't do it. Every trader, again, don't be susceptible to marketing in that regard. Like, you do not need to fund yourself in the beginning. Almost all day traders lose. If you put up 5K, I know you think you might take your 5K and be some type of prodigy and turn it into 30K in a week, and everybody's going to be like, dang, look at Steve. Steve's the greatest. That's not going to happen. You're just going to lose the 5K almost certainly. And so I'm here to tell you, don't do that. Instead, try a funded account program. You know, you're still probably going to lose. Day traders lose. Most of them do. But it's a lot cheaper. Instead of risking thousands of your own money, you can risk $50 of your own money per month. And if you lose, it's not the end of the world. You're out $50 a month. If you pass it, you still get funding. You still get 90% split. The futures market's where most pro day traders day trade anyway, because a lot of them think it's the highest edge. No PDT rule in futures. You can day trade the S&P, the NASDAQ, gold, Russell, Dow, currencies in some ways. And it's just a better way to do it. Here's the link. Check it out. They're an affiliate of mine. I'm biased, though, because I get paid from them. So I'm definitely biased. But it's still the truth, regardless of that bias. You lost 100K? Well, I didn't lose that much. If you're losing 100K, scale down, dude. That's way too big of size. Yeah, I think if you're the type that gets involved with day trading and you immediately lose like 50 grand or more in just a month or two, unless you're like a millionaire already. If you're a millionaire already and 50K is not super significant where it's going to be life-changing money, that's one thing. But if you're some regular dude that just lost his life savings, you probably should never day trade. Right? Why? Because you're a gambler at heart. Like, if you immediately get started day trading and you risk 50 grand of your own money and lose it all, either you were just really susceptible to marketing from nonsense gurus, or you're just a straight up gambler and you need to just walk away because you're not going to win it back. Okay, good. Yeah, no, I'm not talking about you. I had a feeling you were joking. You're really reinforcing my point, which is all good. Yeah, just be smart, guys. Trade safe. Be smart. All right, so we're right back up to that big support level. We got 11 minutes here, chat. 11 minutes. we're trending down a little bit here. Under that big support level. We're going to wait until the opening bell. We got 10 minutes. Hey, John, do you believe in aliens? I mean, I'm not going to get too deep into it. But in general, yes. Like, I think they probably exist. But I don't know for sure. I think a lot of the evidence is like, though, I think there's a lot of evidence for it. But if that's the case, though, you also have to question, why haven't we seen them? If they are here, or if they are real, why haven't we seen them is a different question. I think it's super, I think if you read a lot of religious text, I'm trying to think of the most delicate, like the easiest way to put what I'm trying to say without ruffling too much feathers. If you read a lot of religious texts, they sound like a sci-fi novel, right? But I think sometimes truth is stranger than fiction. And like, I'm not gonna go too deep into it, like I said. But yeah, I think like the Van Daniken theory is interesting. I think, yeah, that's about as deep as I'm gonna go into it. Do you have any tips or tricks passing the top step challenge? I would trade small in the beginning I would take risks when you're trying to get funded because you need to. But once you get funded, scale down size and trade small and let slow and steady gains build up. I would build up a cushion every day first thing with small size and then scale up after you build up a cushion and take larger risks. You know. So we're still flushing lows and breaking down here. And we're still green on the day. We're up a couple hundred roughly. Should I YOLO my entire portfolio on Tesla calls for earnings? Do what you want to do. Not an investment professional. I wouldn't if it was me. I know you're trolling, but still. Yeah, I don't know, Zach. I don't think anybody really knows either way. You know, I think it's too hard to tell for sure. And I think anybody that claims to have like super certainty on the matter is being arrogant. You know. Yeah, I'm ready for next week though. It's been so boring. Like my channel's been so boring the last few weeks, you know. But I know next week we're gonna have thousands of people that tune in, and like everything's gonna go back to normal. It's just this really weird nuance. The good thing though is that like the economic data essentially starts back up next week. Starting next week, we got a bunch of stuff coming out. The week after next is pretty busy too. Let's see, we got like, factory orders. ISM non-manufacturing PMI data. Oh yeah, then we got the Fed decision the week after that. And then the week after that we have CPI. Yeah, so basically starting next week everything goes back to normal, which is good. Like we got inflation data on the 6th. And the week after that, or no, we got the Fed decision on the 6th or 7th. We got the rate decision. Just depends on when they have everything else. Yeah, we'll be back on at 4 for earnings for sure. We got Tesla earnings. So yeah, we're gonna stream them for sure. Tesla's Q3, right? Yeah. Nvidia flush today. Boring is right. We're talking about aliens on an economic channel. Yeah, I mean, it's been a slow couple weeks, man. And again, my channel, over a lot of others, is mostly about economics. And we haven't had data in weeks, you know, so it's been a really kind of boring time for my channel. Again, it's probably one of the most boring times we've had in a year straight. And again, it's just how they design the economic reports for whatever reason this month. Like usually, so again, usually every month we have a gang of stuff. Like if we look at my channel here, and again, I'm sorry it's been so boring, it'll be okay. But if we look at my channel as an example, right? Like what we really do is cover economic reports. So like the last 2 weeks, you know, has been boring. Like the last big thing, we had CPI data 12 days ago. We had Tesla's Robotaxi event. We had PPI inflation data, you know, so like we've got some stuff in the last couple weeks, but aside from that, it's just normal streaming. And that's kind of why I started later today anyways, because it's just been so boring. We're still here. This is my go-to, everybody. Yeah, no, for sure. I appreciate it, guys. It's also earnings season too. Next week's gonna make up for it. Next week we got Apple, Amazon. We got like every report that we didn't have over the last 2 weeks is consolidated to next week specifically. So it'll just be busy, which is fine. It's good. I like busy, but I also don't mind kind of taking a break, starting my streams later like we're doing now. And yeah, it's not too bad there. Yeah, that's what I thought. Okay, yeah, so next week we got like every major earnings report outside of like Nvidia and maybe a couple other ones, and then we have every economic report too, except for CPI, PPI. Literally every other major economic report we have next week outside of CPI and PPI. We have JOLTS, non-farm payrolls, unemployment, PCE data, GDP data, the JOLTS report, jobless claims, unemployment filings, you know, so just every other major economic reports next week. All right, chat, here we go. All right, the opening bell's coming soon. We got 3 minutes, or we got a minute, like a minute and 10 seconds, chat. Why is this week so quiet on data? So it's the last 2 weeks, poker. So it's the last 2 weeks. The last 2 weeks, I'm not sure why they did it like this. It's very rare they do it, and it just means we got a little drought for my channel. But for whatever reason, this week or this month, they put on the last week of the month, which is next week, they've consolidated all the economic reports to the last week of the month, which is again not really standard. It's not usually how they do it. So again, next week we got like 6 or 7 economic releases mixed with Amazon, Microsoft, Apple, Google, every other AMD, you know, every other major earnings report you could think of outside of like Nvidia. Nvidia is the only one that isn't next week. That's big enough to justify, I think. We also have like GameStop, I think, too, right? Let me see. All right, guys, here's the opening bell. 10 seconds. Carol calling in a minute? Yeah, maybe. All right, Boeing just went green on the day, chat. Here's the bell. Is my computer lagging a little bit? I guess it is. Maybe it's just the website. All right, there's the opening bell. It's weird. I didn't hear the ding, ding, ding like I normally do, which is strange. All right, so the NASDAQ's up a little bit here, chat. Yeah, we got a little pop. Yeah, Yeah, I mean, Larry, you've been here enough to know I don't really talk politics, brother. Boeing dumping down. Tesla actually moving up a little bit now, though. Ugh. Look at Tesla. Tesla up to 217s. I'm gonna buy this. It's kind of risky, but we're already up a little bit on the day. This ain't good. Oh my gosh. It serves me right, honestly. And again, this is a challenge account, so my risk here is 50 bucks. And this is why limiting risk in day trading is good. Look at this drop. I got out in time, though. We would have lost much more. But again, we're going to probably just swing for it here. Again, chat, we already... Here, hold on. All right, I'm going to start shorting this now. I very rarely take positions like this early. But I think to get funded, you got to take risks. And so, like, we'll have some fun with this account. All right, we'll add to it. And again, we will try again a couple times. The goal is to get this up to 1,500 bucks a month. Or $1,500 in profit, but we might lose this here. I don't see. I want us to retrace all the way back down, but we're just catching the opening volatility. And Tesla is up a bunch. There we go. We're back to close to flat here. Somehow we made a bunch of money back. I'm gonna add size back to this. Somehow I just took that $320 profit off. We take more off here. I'll add to this too. Take more off there. Somehow we ended green and all this. Look at this. What is this? 7, 8, 9. Here, let me see what I'm up. We made enough back to justify it, but man, volatile. Yeah, we're back to flat on the day. We are completely flat, basically. We are down $20 to start the day. Question, how does Tesla behave leading into their earnings report? All right, we're in another position here. Gonna add to it. All right, we took a piece off. All right, we just made another 150 bucks, so we're up about 300 here. Again, the goal is to get to about $1,500, which is our max profit that we can get per day in this. Yeah, I'm trading way too early. It's a challenge account though, so it's different. Like, I'm trading this one different than I normally trade, but that's okay. Yeah, I could earn more too, but still. Again, here's my last string of trades. Somehow I've got some good trades in at the opening bell. And again, this is on Top Step. This is a funded account challenge. If I pass this test, I get 50K in funding. I already have another funded account that we're going to trade on once the volatility slows down, which is why we're kind of trading on this now. Because, yeah. So we're playing with this now. Tesla's starting to rebound back up. I'm going to buy this dip. It's risky, but I think we're down enough to start the day where I can start adding to this position. We also have a cushion on the day already. All right, we just took half off. I don't think we actually made anything. I think that was a bad fill. I'm going to add to this. There we go. Boom. All right, so we just made another 300 bucks or so. Where are we at? Again, the goal is to make the goal is to make, yeah, we're up over 500 to start the day now, so that's good. We're a third of the way there. Tesla is starting to rebound, which is what we were watching heavily here, chat. We got a big bounce back. I think Tesla might behave kind of choppy, so we're going to start shorting this. 2 contracts down on it though. retracing back, kind of teasing me a little bit. Alright, we just locked in some more. We're up $50 on the rest. We're gonna keep this one, and then if we get into profit, we'll add more once we're already in profit. And that's a big theme of my trading lately, is we wait until we get into enough profit and then we add more to it, like down here. Here we go, just locked in 100. Settle the rest, that way if it turns on us, we're still okay. Alright, we're gonna go and get out the rest. So we still ended net positive on that string of trades. I'm trying to see what I'm up. We're up about 600 down. Okay. I'm gonna try shorting this again, maybe adding to it here. Again, we have a nice cushion. We're trying to attack a range today. It is Tesla earnings day, so maybe we'll have choppy behavior and some stuff. Don't do it to me. Yeah, there we go. Somehow we got out green there. We limited our size here. We took some off. We were tracing a lot today, but we're kind of... All right, we just made another $115. Very small. I'm trading very smart, or trading very quick. I don't trust Tesla. Even though we were correct about the direction, I think we're probably up about 7 now. We're about halfway there. We're about 40-something, 45% there. Tesla's at 218.20s. We were correct about this move. Look at that. I'm gonna buy this here with some size. Now we're gonna take 4 contracts here. I know this seems a little random. I like it when these wicks retrace though, and I think they do a lot of the time. All right, we just took another 90 off. Took another piece off here. We'll let the rest work and then add back 2 contracts now. Oof. I want to see if it pops back up, which is starting to. All right, we're going to take a piece off of that there. I don't trust it enough, but we actually got a decent fill on that exit. Even if it ends up going up, I'm still okay with exiting half of that there, so I don't end up losing a lot if I'm wrong. It might be a bad decision, but it maybe was a bad decision, but that's okay. All right, so we just got out of 100. All right, so we made another. All right, so now we're over 50% to the profit target on the day. Yeah, we're up 900 on this. Again, job is to make 1,500. We'll see how that goes. How you guys doing today? Y'all red or green? Why can't I trade like this on my regular account? Alright, so I was correct about the direction. I was just a wimp with how I approached it and didn't end up making as much as I could. Now we do have this big resistance level up here. I guess I'm going to try shorting into it, but I could also get stuck in momentum, so I just have to be very careful. We're going to add to this now. Take a piece off. Get Get out the rest there. So we just made another $110. We're up 1,000 now. Hey baby, how you doing? All right. So like we've actually been reading the direction really well. Like we predicted this rebound back up. We caught into this big support and resistance level here. We shorted back down into it. So we've been reading direction actually very well today, which is good, I guess. But hey, later, Sam. Have a good day, dude. Have a good one, brother. I think this is a little bit too choppy, so we're going to try to play into it. 2 contracts. I took half off. Took another half off. Yeah, so we are, let me see where we're at. We're at $1,200 roughly in profit. That's good. And I'm gonna try one more trade on this short. I think we're gonna come back down and retrace some of this gap. I'll hold the rest break even now, completely break even. I'll see if we can break down some more. All right, we're out. All right, that's it. I'm done with this account for the day. Not bad. Pretty good little graph here. I'll show you my graph so far today. Yeah. So we are running today 74. Here's the stats of the account so far. Not the best. Like, so we are running. We're up $1,200 net, 74.5% accuracy. Profit factor almost 2 to 1. A little bit bad reward to risk, but that's okay because my accuracy justified it. So far so good here on this one. Yeah, not bad. We're gonna switch to our actual funded account now, and we're gonna be trading micros. See if we can get into the same type of results here with the activity that we've been having on this. Again, we're down a little bit on the day though, which is all right. See if we can catch the same thing. A short. 3 contracts. Two contracts. There we go. I took some off there. Got a bad fill. There we go. All right, so we got a little bit in there. So not too bad. We'll see if we can keep grinding it up. Hey, later, Corey. Have a good day, brother. Oh, wait, rip it up too. Nvidia ended up falling back down. It's now kind of bouncing back a little bit too, though. All right, I'm gonna buy into this with some size. 4. There we go. Not the best fill, but that's okay. We're out. Let's see what I'm up or down on this account. Okay, yeah. I'm trying to use the same mentality I used in the challenge account because we had really good success with it. All right, 4 contracts. I think I have to trade larger size in this account that I'm on, and just be okay with risking something. Here we go. There we go. All right, we caught that breakdown. We should be pretty green on the day now, I think, too. Let me see. Yeah, we're green on the day. All right, so we're back to green in this. All right, remember, guys, we do have Tesla earnings coming out later. Big Tesla earnings report coming out later. If you want to wait on the wait list for it, there's the wait list. We're trying to find a peak of this level where we pushed up so much that we can kind of milk some profits from it, if that makes sense. So a 4 contracts deep. Nice. All right, so we got it. Slowly grinding up some profit on the day on this one now. That's nice. Very flat though. Eventually we are going to break out of this choppy range, I think, here. Alright, so now we're popping up some here. Nvidia is also bouncing back. Boeing's bouncing back a little bit. Tesla's sideways on the day. Amazon's down, but trending. I tend to think we might break to the upside now. We'll try to trade it. I don't ever trade high of the day breakouts, but I like this one just because I think the trend is too obvious here. And so I think it's going to fake some people out. There's 5 contracts. We'll take that bet on that risk. There we go. There we go. 2 contracts left. Don't do it. We might hit flat on this one. I could add size back too. But okay, we'll try. 4 contracts here. Flat on the trade now, huh? Slightly green. I tend to think we're going to break the upside of this range for whatever reason. I don't know why I do. Try to be patient with it. Don't do it, Cindy. Look at that retracement, man. Strange. I'm going to take a piece off of this. I just don't like it. I'm going to take at least 25% of the position off here. I think it might still go up, but just based off of the volatility of this candle, it's a little off. There we go. Alright, we just locked that in too. Somehow we ended up green on this trade. But we haven't broken the top of it yet. We got 1 contract left. I think I'll sit in it. And again, this is on Top Step. It's a funded account program in futures. We're green on the day on both accounts. But if you want to check them out, here's the link. Great way to help support your boy here in this channel. There's the Top Step link. It's really it's the most legit funded program in the world, in my opinion. Yeah, and if we're wrong about our intuition here, which it looks like we are, we're about to cut this. we'll be about flat on the day. Flat could be worse, right? Like getting out of something flat on the day could be worse. We got a cushion that we're trading into now, and if we're wrong, that's a big pullback. We got to get out. So yeah, we're kind of flat on the day, I think. Now let me see. Yeah. Oh, we're actually slightly green. Okay, so we're green on the day and everything. Could have been worse. I'll take it. Yeah, I'll take it. We'll be back later for Tesla earnings. And again, if you want to try Top Step with me, they are an affiliate of mine. I get paid from them, of course, so I'm biased. But we will be back later on for Tesla earnings. I'll see you guys later. I love you all. You'll have a great day. Y'all be great. Again, Tesla earnings later. Big report, big day. I'm excited for it. We'll see how it goes. Y'all be good. I'll see you guys later.